Hi, Adam.
Hi, Dale, Valeria, how are you
How
guys?
are you?
Hi, welcome.
Hey, Adam, I saw your tweet this morning, and it turned out to be very prescient. I think you said 6 reasons to be short the euro was a tweet that came from you.
Yeah, I mean, I'm heavy short the euro myself. I was one of the guys I work with, but it was one of those things the euro had snapped up, and it was tough to short ahead of non-farm payrolls, and you never know which way it's going to come. But I believe there was going to be U.S. dollar buying after the report either way, and it came out strong, and obviously the euro's getting kicked around right now.
What were the 6 reasons?
Yeah, I mean, I'll check out the site. But I mean, the big one for me is that Greece is as bad as it's ever been, really. And the can's been kicked. It was the trigger thing for me was yesterday when they decided not to make the IMF payment and punt till the end of the month. I mean, that's a threat. That's a threat not to pay at all into default, and it means negotiations aren't going very well. And now take it to the U.S. economy, and there was not really any bad signs in the U.S. economy, nothing new that we didn't know already.
Yeah.
And it's a good jobs report. There's no doubt about it.
Congratulations. Nice call, buddy.
Okay. Yeah, and just for the euro, it's just testing around this yesterday's lows and sort of day before yesterday's lows, and it's a pretty impressive move down already. But given the magnitude of that euro surge, Tuesday and Wednesday especially, I think it could be a quick trip all the way to 108.
Yeah, definitely decisive day here. If you were short, do you take partial profits on a day like this when you have a windfall move like that, or you just stay with things until you get to your targets?
Yeah, I mean it's hard not to take a little bit of profit. I think you want to stick with it for at least a half hour here and see what the momentum's like. And if you lose a little bit on a bounce, that's trading. I mean you have to be greedy at a time when you're right. You've been in this trade. You don't want to take that risk with a trade like non-farm payrolls, and then just take a little bit of profit when you could have been on the other side of this trade. We've certainly seen big euro moves to the upside.
Uh,
But if
Val
you
brought
take a
up,
little bit.
yeah, Val brought up there's a parliament meeting in Greece Saturday. There's an OPEC meeting Saturday. What are your thoughts with all these weekend events here, OPEC and the parliament in Greece? You think
I mean,
this?
I think if it's Greek, if it's domestic, you're going to hear negative news because they're playing to the domestic audience in a meeting like that, and that is, we don't want austerity, and that means, in private is where the deal is going to be made. So Parliament is public. If it's domestic, you're going to get some negative euro news out of that. But if it's on the weekend, it can turn around before the market opens. You can't bank on anything with Greece. And you don't want to, make too large of a trade on Greece. So it does argue, like you said, for a little bit of profit taking before the weekend. OPEC is another story. I mean, there's not really anything that's necessarily bearish built in. We know the production isn't going to change. And the only really thing I can see them doing is something with a little bit of jawboning, and that's bullish for oil. And if you look at the Canadian employment report today, it's very strong, and it sets up, I think, pretty nicely for some Canadian dollar longs. Maybe not dollar cat shorts, but something else on the crosses with the Canadian dollar.
Okay, yeah, what a wild range in Canada.
Yeah, the
Canada.
volatility. There's just trades to be made if you're trading, and you really have to get into it on the news because it hits at exactly the same time, and you cannot fight that sort of U.S. dollar wave that just overwhelmed everything. But right after the report, it got almost all the way back to 125, and you think, well, the Canadian report was really strong, but you don't want to fight the U.S. dollar. But the volatility is there if you want to dig in your heels and trade around it. I mean, I think a lot of times you're going to get pretty tough spreads to trade on that, but
Yeah.
there are some opportunities.
Okay. So the seasonals for June are kind of positive crude, the pound, and wasn't it Aussie?
Yeah, and when you
Some of
talk
the
about
June
oil,
season.
Oil is another one as well. A little bit negative for stocks, as we talked about as well. Aussie. This week's been all about economic data when it comes down to it. You had good GDP numbers, which is sort of backward looking. And then retail sales came out, and the trade deficit was an all-time record, and that just killed the Aussie. And now it's all about the U.S. dollar. So I think it's seasonals. They're not going to establish themselves in a heavy news week. So it's something that you want to look for when it quiets down a little bit next week, and even more so the week after that. And yeah, Aussie is one place to look at. But like we talked about, the seasonal patterns aren't especially strong this month, except for really oil and stocks. So those are two of the better ones, and long on oil, short on stocks. And I think OPEC can play into that. But again, the news is always going to be more important than the seasonals. Just really amazing move in the dollar. It hasn't given back much yet, just to keep it live. Still right at 111 in the euro.
So 108 is your next level that you consider critical?
Well, I wouldn't necessarily say it's the next level, but if we can get below 1075, and I think it might take some time now. It looks like it wants to pop back up, but maybe sell at 111.50 if it gets back up to there. I expect to see some heavy selling. I don't expect to see it come back above that unless something happens in the eurozone, and then I think we will get that second push. The market wants to love the U.S. dollar, wants to believe in the U.S. dollar. Massive short squeeze on euro this week, and I don't. That obviously everybody got a little bit burned who was short euro dollar this week, but I think there's still the money there that wants to pile in and drive the euro down and believes it's going to parity.
Acting that way. The U.S. market, the indices are negative in June. Normally a strong dollar will translate into being supportive for U.S. equities. They're at some real important support levels. To me, it looks like if they're going to hold, they better get going right here.
Yeah, well, it's not going. I don't think it's going to happen today. The dollar's strong today. That's cue to sell equities. Fed. There's going to be talk about a September rate hike now. So it's going to be another tough day, I think, for the stock market. It's been a strange week in a lot of ways. It was just sell everything. I mean, sold bonds, sold stocks, sold commodities even later in the week.
So you think Yellen is not going to listen to Christine Lagarde and wait till next year?
If you were not like the dollar, you would have to expect some negative news coming. And it wasn't just Lagarde this week. It was Brainerd, who's the Fed governor. Now, she was named about a year ago, but hadn't said almost anything on the economy for the full year. And they just take their time getting their feet wet. The Fed governors, it's an 8-year term, so not a big rush. And she came out very dovish this week. And then Tarullo, who's a Fed governor who almost always talks only about regulation, came out and he was quite dovish as well. So there is some caution at the Fed that wasn't there before, but that can change very quickly with a good employment report and some other decent economic data and news this week.
Okay. Thanks for joining us, buddy.
Hey, pleasure to hop on, and it's just a great week to trade live in the markets, and the volatility is just amazing. So I'm glad to be a part of it.
Thank you, Adam. It has been a pleasure.
Anytime. I congratulate you guys on these live hangouts. I think it's an awesome format. Anything new is always tough to do, but got to stick with the technology, and I think it's a great format for readers and followers at Forex Live and FX Street.
So you can follow Adam's work at FX_Button and at Forex Live. Don't fade Adam Button. That's all I can say.
Yeah, Adam Button is the FX Street Man of the Year, so don't fade it.
Yeah, you took my award, buddy.
I hate it. Come on.
You deserve it, man.
Okay, Valeria, do you have any questions?
No. I was thinking that I'm a woman, so I can be the woman of the year, and no one can take
me. You are, Val. You're the woman of the decade.
Yeah.
In my eyes, anyway.
Thank you.
We got a last question about the gold. Is somebody asking about the gold? What is your thought on the gold?
Yeah. I think it's just wait and see. It's been a tough trade. I mean, we thought up at 12.20 when it was up there 2 weeks ago that it was going to go, and the Fed just wasn't dovish enough to make it move. Now on the downside, it's still even a little bit sticky here today, but it looks like it could go. And that's where what I see happening. If bonds selling off a little bit, gold down. It's a cautious trade though. Even today, quick move down, and half of it's already given back. But as the downside of that range goes, I think you can dip your toes in and try to hang on to the shorts.
Maybe we have to flush out the bulls under 1140 first, Adam. What do you think?
Yeah, it kind of did that a little bit when it popped up over 12.20, and it got a little bit of enthusiasm going. Thought, well, maybe Yellen's going to be a bit more dovish. The economy's not doing so well, but this probably was the economic scare that got people thinking about pushing out liftoff farther into or even into 2016. And I think now it's sell if the Fed's hawkish. So maybe wait until you have Yellen come out and say we're happy with the economy, or we're on track. But they're so data dependent that maybe you just have to believe that it's coming, because it might miss the trade if not.
Well, the 240 10-year yield pressures at 2. I was talking 2.5. We're almost there, Adam.
Yeah.
What are you thinking?
There's bond trade is something else, though. I mean, the Bund, the spreads, whatever's happening there, and it's tough to put your finger on it. It's not, I like to come out here and say that everyone knows everything, but when Bunds, it was the second worst 2-day period ever for the Bund, at least on record. 34 basis points higher, from 50 to 88, and it didn't make a lot of sense then, and it doesn't really now. It's just a squeeze, and the ECB is buying, and Treasuries got caught up in it. I think ultimately the path is higher in Treasuries, but what's happening in Bunds can pull it down temporarily, and it makes for a tricky trade. I think right now if you're trading Europe, you have to keep one eye on the German bond market.
Okay, and also they're talking about liquidity issues. Having been a commodity broker for years, the spread on the bond and the note used to be 1 tick. And the bid offer, there's some error in it in the last month or so. Could that illiquidity spread to other markets?
Liquidity. It's a strange thing, and it's there. It's not like it was if you're making huge trades, but at the same time, it's one of those things that people say, that talk a lot about when it's not really making sense what's happening in the market. I mean, just low liquidity isn't necessarily a reason to sell, and it's been just selling. So I get it, and it's a problem, and the ECB's taking up a lot of supply, but there's still supply there. The Fed isn't buying anymore in treasuries. It's just one of those things you really have to keep a close eye on it, and try to get on the right side of the trade, because something is definitely happening in the bond market. And it's liquidity, yes, it's Fed rate hikes, yes, maybe Europe's a little bit better, but none of that really justifies the magnitude of bond selling we've seen this week.
Well, that's what happens when a rubber band stretches far beyond people's expectations and then readjusts to the mean. But I'm telling you, Adam, in the bond pit, it was one of the most liquid pits, heaviest dollar volume pits in Chicago, and there used to be just, a 32nd or a 64th between the bid and offer, and locals are not seeing that kind of. There's big spreads between trades.
Yeah, no,
That's strange to me.
Yeah.